One.
Hey, everybody. Welcome to today's episode of the Daily Dealer Live. I'm your host, Sam Dark. And Yossi, thanks for the countdown today.
We're
car dealership
live.
guy. What's up?
What is up, Sam? How are you?
The best show in automotive anywhere on this Friday, the 13th of June. A reminder to our audience, as you all know, we're live across all CDG social media platforms. Join the conversation today. We got some exciting things coming up. Post your comments. We'll include them real time throughout the show. About that, Yossi, what about today's show? What do we have coming up? We've got someone talking about Autotrader's recent announcement about their change from Carfax to AutoCheck. There's a little bit of drama around this. We're going to cover it today. Find out the details from Cox and from Autotrader about it. The announcement's been met with questions from dealers. We have your questions on that here. Joining us today, Jade Terreberry, Senior Director, Strategic Planning and Business Development at Autotrader, to walk us through those questions. But first, let's dive into today's automotive headlines. So first up today, in breaking news yesterday, as anticipated, President Trump has blocked California's plan to ban gas-powered vehicles by 2035. It happened, triggering a major legal fight with Governor Gavin Newsom. Shocker. The president is no stranger to public fights with Newsom at this point. The move revokes California's Clean Air Act waiver, which let the state set stricter emissions rules than the federal government. And without it, California and 17 other states that followed California can no longer enforce their own EV mandates. Trump framed the resolution as a way to, quote, rescue the U.S. auto industry from what he called an unrealistic mandate, a.k.a. an attempt to manufacture consumer demand for something it does not yet want. But California is not backing down. Attorney General Rob Bonta and 10 other states have filed suit, calling the move illegal, unprecedented. Newsom responded with an executive order instructing regulators to draft a new plan in case they lose in court, which I bet you $10 they do. So if the rollback holds, it could reshape the auto industry. Automakers are already reconsidering their EV strategies, as we all know, with some starting to shift back towards gas-powered models or hybrids, which are in much higher demand.
I saw, Jack Hollis, former CEO of Toyota, just actually tweeted 44 minutes ago. He wrote, "No powertrain mandates in the USA, exclamation point. Simply listen to the customer and provide them what they want. Come on, California, do better."
Yes.
So Jack Hollis. Shout out Jack Hollis.
Let's do it. Let's go. All right. Next up this morning, for the first time in over 5 years, check this out. Banks are gaining ground in auto lending over OEMs, captive financing, and credit unions, taking back market share from captive finance companies as interest rates begin to ease and OEMs scale back incentives. According to Experian, banks now hold 26.55% of the auto finance market. That's up from 24.79% last year. And while captive lenders like Ford Credit and GM Financial saw their shares dip from 31.28% to 29.81%. You can see the graph if you're not watching us on the podcast. Banks also lead in used vehicle financing, just edging out credit unions. I think the credit union impact is regional. We're still seeing it in a lot of our areas. And they're making small gains on the new car side, too, as leasing ticks up and the lending environment becomes more stable. For dealers, this could mean fewer subvented financing offers and more variability in rates, forcing manufacturers to rethink how they drive sales. So an interesting trend this morning as banks take share from captives and credit unions. Finally up today, access to auto loans improved slightly in May. This according to DealerTrack's Credit Availability Index, ticking up to 96.7 points. Lenders approved more applications overall and eased up on subprime standards, with approval rates and subprime lending both inching higher. But the trade-off is clear. Borrowers are paying more to get approved. Average contact rates rose to 11.28%, and more buyers are stretching out loans beyond 72 months to keep their payments manageable. Credit unions and banks led the shift towards looser standards, while captive finance stayed more cautious. Most of the improvement came in used vehicle financing, where credit has been tightest. Still, there are signs of stress beneath the surface. The proportion of buyers with negative equity, this is no surprise to anybody who's been around for the last 4 or 5 years. The proportion of borrowers with negative equity rose by 34 basis points. Again, this according to Cox and DealerTrack. So thanks to them for that data piece. So that's our news for this morning, Yossi.
Yep, let's go. Let's do it. So,
Let's go.
Sam, before you bring Jade on, I want to share
All
some
right.
quick context because I think
All right. Yeah.
this is important. So, I want to say 2 days ago, I started getting text messages in the morning, and it was a bunch. Oh, let me just mute my computer. There we go. It's a bunch of dealers, and they were sending me screenshots, and I look at these screenshots, and it was a message from AutoTrader to its
Yeah.
dealer clients saying, "Hey,
Yeah.
we have gone exclusive with AutoCheck." And so, we did what we do. We started looking into it, asking questions, pinging dealers. Right away, it seemed like some stuff happened. Um, you know, I heard pretty immediately that Carfax, within hours, sent out a note to some of its dealers that they would start, or that they were partnering with GM to co-op Carfax. Right, like this was all within hours. But long story short, this was met with, on one hand, some frustration from dealers who are not partnered with AutoCheck, and now have to use AutoCheck if they want vehicle history reports listed on AutoTrader. On the other hand, it was met with almost like indifference from dealers who are with AutoCheck and don't really care, and maybe have moved to AutoCheck years ago and haven't skipped a beat, as they say. So we thought it was super interesting, and we connected with Cox Automotive and AutoTrader, and we said, hey, there's a lot of confusion around this. Come on the pod. Let's talk about it. That's my context.
And so as a result, we're super pumped to have Jade Terreberry here with us, Senior Director at Cox Automotive, to talk about this announcement. So, Jade, welcome to the show.
Here.
We're excited and interested, as is all the internet and automotive, to hear kind of some context behind this change, right? So you announced that all eligible vehicle listings on Autotrader.com and Kelley Blue Book will now feature Experian's AutoCheck vehicle history report instead of Carfax, which you've long done. So first off, what's driving this change, and what's been the feedback, starting with what's driving the change?
You bet. So first, I will say we would call this powerhouse brand collaboration. We have been on a mission for a whole lot of years, being that data is our superpower across Cox Automotive. And thank you guys for, I saw some Cox and dealer track data there in your opening news segment. But you take the power and trust that consumers have in the Experian brand across credit and finance, and then you take Kelley Blue Book, which is, of course, is the most trusted brand in automotive, 100 years running, and you put those together, and it changes the game for how we intend to transform the vehicle history report space for consumers and dealers. And it's really exciting. But I want to say too, and I'm sure we'll talk about that in a few minutes, this is as much about transparency and return on investment, and ability for our dealer clients to be able to understand where their value is coming from, to track that consumer journey, and to create a more connected consumer experience, which is what consumers are looking for today. And it's what makes them convert with our clients.
So what drove the change from the one platform, which is well known? Carfax has spent a lot of money investing in its brand and getting its brand out there. It's kind of like the Xerox brand or Kodak back in the day. You say Carfax and it means something, right? What drove the change from that, fairly highly invested in brand over to AutoCheck, which in some circles is lesser known?
Well, AutoCheck may be lesser known, but most of our clients aren't aware. Experian has 70 million consumers in the US with the Experian app that they monitor for their credit, and it's expanding into other things that are part of the ownership journey. Kelley Blue Book, for example, most of our dealers don't know we have millions of consumers on a monthly basis that move through our ownership funnel: service, repair, maintenance, recall, warranty. And there are so many opportunities that we have to start connecting those dots to make a better dealer experience, a better consumer experience. But I also want to say, and I think Yossi's heard me say it before, but we believe in doing the right thing for our dealers, but relationships work because you make each other better. And we have been looking at the VHR space for years, trying to decide where and how we bring the right cutting edge and best in class product to market. And this partnership with Experian gives us the ability to do that, to truly transform the connectivity of ownership all the way into purchase journey, which of course is where return on investment and profitability comes from for our clients. The other big piece that I'm sure you saw in our responses to a lot of those questions that came from our dealer audience across the global platform for Autotrader, looking at the last year of data, VDPs that have an Experian VHR and AutoCheck VHR on those are converting to leads for our dealers at a 44% higher rate. And, we, like our dealers, work so hard to drive the most quality audience and value for our dealers. And it is our obligation to our clients to keep those consumers on their VDP to convert and connect to a value event for our dealers.
So part of the issue is you don't want the consumer taken off that page, right? You want the consumer to stay
That's
on
what our
their own
dealers are
page.
paying us for, right? Is to drive profitability and to drive connections for them. If we're going to spend the money and they're going to spend the money to get that consumer to their VDP, we're going to keep them there and help them get them one step closer to purchasing.
So for dealer groups like us, we've been on both sides of the fence. We happen to be on Carfax now. I think both are good products, right? If you currently buy and use Carfax, where does that put you with AutoTrader? Are you unable to show vehicle history on AutoTrader listings?
Yeah, that's right. So like many of the other marketplaces, in fact, Experian AutoCheck is the only VHR that is on all of the third-party marketplaces. Car Gurus, for example, only has AutoCheck. Autotrader, Kelley Blue Book. We've actually only had AutoCheck on Kelley for many years, but that's right. So Experian AutoCheck powered by KBB will be the exclusive VHR on Autotrader listings, which gives our clients the ability to have as small of a blind spot as possible with their ability and our ability to track and report on consumer journey and to convert those consumers for our clients without having them retargeted or taken off site.
Hey, Jade, I have a couple questions on this. So first of all, there's some dealers right now are paying Carfax and now they're in a bind, which was where the frustration arose for many. That what do they do right now? Like, what do you say to if I'm paying for Carfax right now and Carfax isn't cheap, and I might be paying for them because I'm justifying that my customer wants the Carfax for one reason or another. What do you recommend? Like, what do you say to that dealer now? Do they have to double up? Do they have to give up one? Like, what's the goal here?
Well, our clients and dealers and OEMs for that matter, they want to be where the consumers are. And, one of the biggest themes that we have seen in all industry messaging over the last couple of months is consumers are on third-party marketplaces. It's where they're doing their research. It's where they are, they're comparing, and they're not only are they starting on marketplaces, but even if they're doing a lot of connection in between on dealership websites or OEM or lender websites, they're finishing that journey on third-party marketplaces. And so again, we believe we've got to keep the consumer educated, but much like our dealers have learned about marketplaces over the years, it's not always an either or. It's a return on investment discussion. What value are you getting, and does the value exceed the cost? And so I would think the same way about the value they are getting from a VHR. One of the big differentiators for Experian AutoCheck offered by KBB is they have many exclusive partnerships with auctions. It's the most comprehensive set of auction data that exists in the marketplace. If you haven't looked at AutoCheck for a while, in the last 12 months, they've increased their service history by over 50%. Of course, they're getting ready to get all of that rich dealer track service data. And you'll see us adding a lot of new data sets as we start to transform what Experian AutoCheck offered by KBB looks like as we think about things like all of that rich service and ownership activity that happens on Kelley Blue Book. But I would tell dealers, like anything that they are going to invest in, return on investment and profitability is the metric that matters. So think about value. You've got to make sure value exceeds the cost. But most importantly, we're excited next week when we start talking about lift across our properties, where we're actually able to convert the consumers that get to those dealers' listings. And that's our obligation to our paying clients.
Why you said that according to your data, AutoCheck is converting better on AutoTrader for dealers. Why is that? What's different? Like specifically, why would that convert better?
Yeah,
when it
well,
comes to
some of that
customers.
we'll leave to common sense of our dealer audience, but there is a reason. We know it's not the difference in the vehicle history report itself, right? I think we can all make that assumption, and we did a tremendous amount of research, as has Experian, to understand, what are the things in a vehicle history report that really matter to a consumer, as well as how do the brand offerings that are on there. You'll see the co-branded logo. You already see that on AutoTrader as of Tuesday of this week. But the conversion from our perspective is based on, what could it be? The consumer is staying on that VDP and the consumer is converting to that dealer. And so we expect we'll have some really exciting lift data to share with you early next week. We hope to be back with you when we see some of that, but that'll tell you it's not a matter of the VHR itself. It's a matter of what's happening to the consumer when they click on that VHR.
So Jade, correct me if I'm wrong here, Yossi, but I think this is part of what Jade, you're saying is in the Carfax world, that consumer gets pulled off the whatever site they're on, the third-party listing site, and gets put onto Carfax's site, right? With you're keeping them on your site, so you own that traffic longer.
We're going to focus on keeping them on our site. You got it.
No, I think, Sam, I think that's a good point. By the way, I don't think that's obvious. I think that's important to note that, because I've checked, thousands of these, and that's not the first thing that came to my mind. So, okay. So you're basically saying we keep them on site. Understood. That makes sense. I think the other, when I tried to distill this down as simple as possible, I say there's no doubt about it that dealers, right, when in any form of partnership like this where it becomes exclusive and I have to potentially go sign up with another partner or switch vendor on my end, there's work and there's cost. And so, and I think, the elephant in the room is everyone is saying, okay, well, Cox Automotive is getting paid for this. How do we benefit from this relationship? And I don't know the financial arrangements behind the scenes, but I'm saying clearly there's some financial arrangement, which is great. Everyone's entitled to, make a profit, and especially when you offer the value. But I think that's what is important for communication, for dealers to understand. Okay, then fair. If there's going to be this exclusive partnership, here's how I benefit from it, and those specific points I think are important. One more thing, Jade, that I would just point out, and this is more of like a general concern with VHRs, not specific to AutoCheck by any means, but I think in many cases, dealers, many can attest to this, have either been sued by consumers who have seen an accident on one vehicle history report and not seen it on another one, or vice versa. This happens, they don't always align. I think many dealers have pretty much. I would be shocked if any dealer hasn't experienced this. Not everyone has been sued by it, but I think that's just, that's not exclusive to any specific vendor, and it could happen on any platform. But it's just something that came up in my conversations with dealers, like, oh, if I only go with that or with this, well, now, I expose myself to some liability. So these are just some concerns that came up, right, wrong, or indifferent.
A couple comments there, and you're exactly right. I mean, there are thousands and thousands of dealers that have both, because of the exclusive auction data that AutoCheck has, because of some of the varying service records that exist out there and data sources that exist. But one of the reasons that we chose to partner with Experian AutoCheck is their buyback protection program. And, that is really strong, backed by the power and the depth of the Experian brand. They also have, of course, their patented and proprietary AutoCheck score, which is incredibly valuable. Dealers use it, consumers use it, but that buyback protection is one of the key reasons. And it's one of the reasons why, we thought we didn't go build our own. We partnered with what we believe is the best core tech stack in the space for us to now transform the VHR industry together to drive more value for our clients and more value for our consumers.
Before I make a statement which might actually surprise you a little bit and give my opinion on it, what would you say to those dealers or to those in the industry that say Carfax has more history records in its database, and so it's going to provide a more complete picture of the vehicle than really any of these other history reports. They've spent a lot of money to acquire records from multiple different sources. And I think a lot of the VHR companies have a little bit of catch up to play. What would you say to anyone that said that?
Wait, Sam, but is that, do we know that is that like anecdotal or? Because
it would be anecdotal to my experience.
AutoCheck's been around for so long, and I don't know if I'd put them in like an other bucket personally. Yeah. I just feel like maybe I'd put a third player in an other bucket. But anyways, that's just my 2 cents. If that's anecdotal, I get it.
It's anecdotal. It's based on my experience.
Yeah. Well, my initial couple of comments there, and you all know, I come from dealer world. I've been with Cox 10 years now, but I tell them every day when I take off my dealer hat, send me back into dealership world, because that's what makes me good at my job. But, one of the reasons that we didn't do this sooner, we've been exploring this for quite some time, but Experian has increased their service record coverage by 50% over the last 12 months. That's going to happen again in the next few months. As part of this partnership, they're going to have all dealer track service records and service data, and market share in the VHR space is one of the biggest things that drives vehicle service record collection and ability to publish that. And so it's one of our core focuses as we transform the VHR business with this joint product with these two brands, is making sure that it is best in class in every way, service records, auction records, data, buyback protection, and more.
So here's my opinion, and this isn't anecdotal, this is an opinion, right? I actually think anytime a company becomes big enough and they become kind of the standard in an industry, they become tougher to negotiate with. They become more difficult to work with.
Competition is a good thing.
Yes. I think anybody that's tried to negotiate a contract with any of these vehicle history companies sees who's kind of that 800-pound gorilla and who's aspiring to be. Here would be my hope. I hope you guys strengthen AutoCheck. I think it's a great company. We've worked with them to the point where, there is solid competition among all the VHR companies, and that you guys create some real competition. I'm not a fan of the idea of having to pay for both, to be with AutoTrader and get consumers that history report if you don't currently have an AutoCheck. So hopefully there's some great solutions to that are pending. But competition is awesome. And anytime there's competition in the marketplace, everybody wins.
Yeah, it has been interesting to us, or I'll say to me personally, the overall feedback, because we know, change is tough, disruption is tough. Dealers have so much on their plates, and so many things that they have to consider every single day, especially when it comes to spend decisions. But the comments and groups that have come out of the woodwork to say thank you. That are really excited about this, because of course, same thing. They believe in competition. They want to see something that is innovative, outside of the box, transformative, that pushes this to the next layer. And they want to see KBB and ownership and those millions of consumers that are, scheduling and looking at fair repair pricing there and doing recall checks monthly, those starting to turn into leads that go to these dealers that are subscribing to these products. So it's going to be a really fun year or two as we start to transform the vehicle history report space. And so thank you, guys.
Jade, we appreciate you being on the show. Jade Terreberry, Senior Director, Cox Automotive with AutoTrader. We appreciate your perspective and answering some of the questions we've had in the marketplace out there. Thanks for joining the show.
Thanks for having us. Have a great weekend.
Thank you. A couple comments from the audience. Yoga Car says, I think the point was it converts better with the history report. I think that's true, but there are multiple history reports, right? And I do think one of the things they're trying to do here is not get people jumping around so many different sites. I think that could be part of it. So, but an interesting conversation, Yossi.
Yep.
All right. Next up, let's turn to someone who has her finger on the pulse of automotive, CDG's editorial lead, our very own roving reporter for today's Daily Dealer Live, Anna Del Villar. Anna, welcome to the show.
Hi, Sam. Hi, Yossi. Glad to be back. Excited to talk about kind of the big story. Look at the service and parts department.
We can't really.
We've been hearing from a lot of dealers.
1 second.
But we've also heard from a lot of dealers.
Anna, we can't hear you well. Let's move on to the next segment, and we'll work on our internet. Our internet's cutting in and out.
All right. So hey,
we'll come back.
So, hey, Yossi, talking about content, Let's go to our live read. This episode of Daily Dealer Live is brought to you by Nomad Content Studio. Many dealerships are still getting social media completely wrong. Nomad, Omar, and the entire team there. So I can give you a personal endorsement from this. We at the Ziegler Auto Group use them for all of our podcast clips. They post things to our social media sites and gives consumers a behind-the-scenes look. Nomad Studio does. So Nomad does a great job of not only helping dealers to film the content, capture the content, create it, storyboard it, clip it, but they also help with the postings. They're the same team not only behind us, but names like George Saliba, Benzs Bowties, and EV Auto dealers who've built national brands and sold more cars in the process. If you want your dealership to be next, head to trynomad.co and book a call. That's Nomad. Right? And
Nomad,
you use them, Yossi.
Nomad is crushing. They are signing up dealers left and right for social media and content. So highly recommend.
Yeah, very good. All right. Well, next up today, let's turn to dealer principal at Raceway Auto, Jake Liebowitz. Welcome to the show, Jake. By the way, today is a tale of technology fun, is it not? Jake, are you there?
Sure is.
Can you hear us?
Gotta love live.
Can you hear me?
There you go.
We can. Jake, how are you?
How are you guys?
Doing good.
Good. Busy.
Good. How's biz, Jake? Talk to us.
So it's very brand. I'm sure Sam can attest to this. Each brand kind of has its own challenges and its own kind of nuances. I think you really got to focus in and maximize the brands that have upside near term. But we take a longer term view on most of our stores where, if we feel a brand is not strong today, we still look out 12, 24, 36 months to pivot and kind of position ourselves to succeed. So there are challenges, but there are franchises like Kia that are very strong. And there are other franchises like Nissan or maybe Stellantis that are not as strong right now, but we do feel like there will be strength in the next 12 to 24 months in some of those brands. So it's very brand specific and market specific, but there are kind of pockets of sunshine for sure.
Jake, can you give us a quick overview of your group? Where are you located? What brands do you have as part of the portfolio?
Sure. We've got 5 large Kia dealerships in Jersey and Pennsylvania. I'm based out of Freehold, New Jersey. We've got Nissan in Freehold right on Route 9. We've got Kia in Conshohocken, Philadelphia, Pennsylvania. We've got a cluster of stores in South Jersey, ranging from Chevy to Volkswagen, Kia, Hyundai, Stellantis. We've got Audi all the way up in Wilkes-Barre, Pennsylvania. And we're in the Lehigh Valley with Chevy, Isuzu Truck, and Kia. So we're sort of spread from central South Jersey up into Philadelphia and Lehigh Valley. And we feel like our geographic, we're condensed enough, but we're also broad enough to sort of see different markets and take advantage of different areas.
See, I got to ask this. Well, I started in the car business at an Isuzu dealership selling Isuzu Troopers and Kias and Rodeos and diesel pups. Jake, you have an Isuzu franchise. You do the commercial truck. Is that?
We do.
How many units do you guys sell out of there? I'm just curious for my own. That's where I started. I love that brand.
Yeah. So when we bought this store, I would say it was doing maybe 15 units a year. And we have years now where we do upwards of 150, 200 units.
Nice.
The fixed business can be strong and they're bigger trucks. So, it's a little bit different than, a regular shingle. But it's actually a part of our Kia dealership up in Allentown, Pennsylvania. And, it's an interesting business for sure. It's not something I would want as a single point. But before we bought this dealership, it was actually a Dodge dealer and they had Dodge Isuzu. So they sort of went hand in hand, having diesel techs and having the truck customer.
When we were doing online sales during COVID, we had to place an order for those Carvana trucks because we were, delivering all online. And we had I think it was like a year and a half wait or something like that. And by the time that it was about to be delivered, we didn't need nearly as many. We were like, what are we going to do with this? People offered us money to transfer the purchase to them because no one could get their hands on those, those pickup trucks that do deliveries. So it's been an interesting market.
And,
Jake,
generally you need to upfit them as well. So if
correct.
You've got
Correct.
Food distribution company and you need a refrigerator truck, that's a process of upfitting the truck. And, there's margin on that. It's kind of like a sublet situation, but, it's an interesting business. We're in it, and I don't know if we invest a whole lot more in that segment, but we've got it.
And I'm going to ask you about investing because one of the reasons you're on today is because you've just entered a very big diversification project. Let's hold that off for the end of the segment. I think that's very interesting.
Sure.
And it's something I've been talking a lot about. Before we get into that, you were mentioning some upside with brands. Can you tell us specifically right now what brands in your portfolio you're seeing upside and where?
I've said this to you before, Yossi, and some. I think you almost have to look at it like stocks in a stock market. You'll have cycles where certain sectors will be stronger than others. And I think we try to take a viewpoint where, we look at a brand and we look at the leadership, we look at the product, we look at, are they dealer friendly? Are they not? And then from there, generally you can get an idea of, look 12, 24 months out. For instance, Nissan has had extreme challenges, as you know. That being said, I feel the Nissan leadership is extremely strong right now. The product is great. Nissan is pro dealer now, and I don't think they've been pro dealer maybe ever. And they're changing their tone, which we're happy about. So I would say Nissan, although it might not be today or next month or 3 months out, I believe that's a brand that in 9 to 12 to 18 months will be in a much better position. I know you've had Vinay on here, who's a tremendous executive, and they recently brought Christian Munier on, who's a visionary, and we like it. It's profitable. They have profitability challenges right now, but we do think 12, 24 months out that will change. So there's a lot of little nuances where today might be a challenge, but if you can look out further than 12, 24 months, and you can kind of, you're not going to be able to buy a stock when it's at its all-time highs. You got to buy it kind of when it's, not in favor, and you got to put processes and controls in place. And then as it becomes in favor, you benefit.
Jake, I like how you've mentioned this kind of day trading your inventory before, and some people in the comments specifically noted that the way kind of the just the language you use when it comes to inventory and how you think about it, given the volatility. How are you managing inventory between your stores? What is the policy that you have in place? How do you work with how does each store work with each other between these locations?
Yeah, so we generally will have a weekly meeting with our vAuto rep, who is tremendously talented. And we'll basically look at the enterprise level, and we'll look at fresh trades. And for instance, if we trade a luxury import car in Allentown, PA, but it belongs in Freehold, we'll immediately look to send that car down to Freehold. Mainly because if the car's a 70-day mover in Allentown, but a 35-day mover in Freehold, you already have enough information to make a calculated decision. And we do the same thing across, different markets that way. But you got to have your people on the same page, and you got to have a control and a process to where that can take place.
What happens to the manager that traded in that 30-day mover in Freehold, which he got it 3,000 under market value or whatever they got it for? How does that reconcile?
They'll pay MMR or adjusted, MMR plus recon. So if it's under a certain age bracket, they will always pay what the car is worth if they were to go to the block and buy it.
Got it. Okay. How are you feeling right now about Hyundai and Kia? And I know they've been on a tear since COVID. Affordability's been tight, and people were looking for value. Hyundai and Kia sort of rose up. Kia really tremendous rise. How are you feeling nowadays in terms of opportunities and challenges there with those brands?
Yeah. So again, what's interesting with Kia, a lot of the Kia dealer body is the same dealer body that had it in 2016, 17, 15. And back then it was a grind. And I think the guys who got on Kia later in the game that thought it may be a cakewalk because it's a hot brand, nothing in this business is that easy. And I think, doing a massive Kia deal in South Florida, if you're a Toyota dealer, might be different than if you already have Kia in the Northeast or in Texas. So again, I think it depends on your position. We've had Kia for a long, long time. We know the nuances, we in variable and fixed. And we love it. We like it a lot, but we are very market specific on where we would, entertain owning another Kia dealership. Like, we would not go and buy a deal in a small rural market. That's just not for us. That being said, that's an opportunity for another guy. But I do think the Kia design, the Kia warranty, the programs, we're seeing a lot more of the Lexus customer or the Infiniti customer coming over to Kia Tellurides or Kia PHEV Sorrentos. We're seeing a lot of that conquest happening.
Yeah, that the first realization I had of that was where I have a friend who's a cardiologist, and where he's talking to me about cars, and he's like, "Hey, yeah, I've been looking at the Kia Telluride," and that was when it kind of clicked. I was like, "Wow," just like point blank. I mean, this guy is can afford anything he wants and luxury, and he's really attracted to Telluride. So something is doing well from a marketing and branding perspective.
Yeah. And then I think also, that customer is going to spend more money when they maintain their car. They're going to spend more money in the back end. So, Kia really leveled it up, and it wasn't just like a one-hit wonder. They're continuously coming out with these beautiful, vehicles that are priced extremely fair, and Hyundai the same. I think Hyundai is a bit more competitive. Market dependent, but where we're at in the Northeast, there's a lot of dealers. So, you got to be aggressive, and you got to make every single car deal. And, that's just how Hyundai is.
Jake, real brief before Yossi asks about this acquisition, because we're getting close on time. I'm super curious, as many Kia stores as you have, I see in the notes here that you've had a 250% increase in your fixed ops gross profit. So many dealer groups right now are focused on fixed ops. It's retention, it's bringing the customer back, and it leads to return sales. What are a couple tips that viewers could learn from in the Kia world that led to that 2.5 times 250% increase?
I think that your first service, and it's kind of like back to the basics, as you know, get your first service done, get the customer back in the door, treat them like family. Generally, you'll see a correlation between CSI and retention. And, I don't think it's rocket science. I think a lot of it is just, MPIs on every single customer. Every customer needs to get, we're doing video walkarounds, video MPIs. That's been a game changer for us. And a couple of years ago, we're doing it at our Audi store. We're doing video MPIs, and I see the CP, go like this. I'm like, to our Kia techs, guys and girls, we're doing this. And, we got a lot of pushback. We got a lot of resistance, but, if you basically mandate it, it's part of your employment. it will get done. And when they see how it affects business, then it's just a snowball effect. So
250% is pretty cool, Jake. That's a big accomplishment for that dealership there in Allentown, Kia.
Yeah,
so
I mean, it's not just Allentown. Conshohocken, we did same thing, probably 350%. And a lot of it is just, as you know, it's there's little nuances that you and I can talk about, with each OEM, but you got to maximize your customer pay, your internal, your warranty, and there's ways of doing it that each dealer knows. It's basics.
Yossi, we should ask about this acquisition.
Let's do it. Well, yeah, before we wrap up, so I've spoken a lot about diversification. I think it's been a big trend amongst dealers in the last couple of years. Earnings have been at record highs for the most part, say since 21. And just generally speaking, there's been a lot of change and volatility, EVs, autonomous vehicles, regulations, like all these things. So I'm very interested in just diversification. I saw, Jake, you were just part of you led a really big acquisition of this like historic property in Freehold. I'm reading here, I'm looking at this article. You have a community-centered redevelopment vision for this big piece of real estate, which happens to also be your group. Raceway happens to be named after this property, I believe. So what's the deal here? I mean, and let me sort of lead the witness here just a little bit, but what it tells me is either one of two things or both, which is that you are strategically diversifying because you're extremely like indexed to automotive, or two, it's tough to find more great deals to buy in the dealership market. So you're looking outside of traditional dealerships, potentially lower IRR. Maybe I'm wrong. But regardless, you're looking for other ways to deploy capital. So tell us a little bit about the story here.
Well, I think, as you know, a lot of car dealers own their real estate. So we're no stranger to real estate or development or building car dealerships. It's crazy. Everything comes full circle. When we purchased Freehold Kia in 2017, the reputation was bad. And I looked around in the market. I'm like, what is synonymous with Freehold? And it's Raceway. There was a racetrack. It was the oldest horse racing track in the country, 178 years, I believe. And I named Raceway after that. And it just so happens it's maybe a 1/10 of a mile up the road, and we had an opportunity to purchase it from Penn Gaming and Parks Casino. It was a joint venture type deal, and it had nothing to do with not wanting to continue investing in automotive, because that's what we do, and we will buy automotive deals as they come to the table. But this deal, it's about 60 acres. It's prime Monmouth County, Freehold. It's got a ton of history, and we saw an opportunity, and we love the area. We want to give back. We want to build something that's tremendous, and I saw it as a generational sort of opportunity, and that's why we took advantage of it.
Very cool.
Yeah,
Jake, appreciate you coming on.
Thank you, guys.
This was super
Appreciate
insightful, and good luck.
Thanks, guys.
250% increase in fixed ops. I can't get over that. I want to hear the rest of that. Anybody that can do that is winning in big ways. And speaking of winning, so Yoga Cars, hold on. So Jake is saying not to look at 30-day sales and change everything first of the month. Comment from Yoga Cars.
Wink.
That's
wink. A wink right there.
Yeah. Let's turn to our next guest, president, owner of Matt Bowers Automotive Group, Matt Bowers. Welcome to the show, Matt.
What's up, gentlemen? How are you?
Good. How are you?
Matt, do you sleep? Every day I feel like I see a new acquisition, a new award.
I sleep. But I don't know if I sleep well. It depends on what's going on every day. We got a lot going on in this world recently, but I do sleep.
What keeps you up at night, Matt?
That's good.
What keeps me up?
Yeah.
CSI.
No, my CSI is fantastic, actually. I think what keeps me up is all the things that we haven't spoken about. We talk about tariffs, we talked about COVID, we talk about electrification. We talk about all these things. So typically the thing that it is, it's something that nobody's talking about. So I don't know what that is. But whatever it is, we'll figure it out.
It's a good way to put it.
Yeah.
Yeah. So how's biz overall, Matt, in your footprint on the Gulf of America and elsewhere? First, maybe tell everybody where your stores are located and what you're comprised of.
Yeah. Louisiana, Mississippi, Alabama, Tennessee. I have one store in Metro Nashville. The rest of them are located right along the Interstate 10, along the Gulf of America. And business is good. I have no reason to complain. I mean, I could complain, but it doesn't really matter. I think that we talk a lot. Y'all talk a lot. I hear a lot of people talk about the brands, this brand, that brand. I think at the end of the day, it's the people. And if you run them right and you're a good dealer, you're going to be fine. You're going to make money.
Let's break that down a little bit. We talked, yes, and you garnered the sound effect there. Nice job. Let's break that down a little bit. We talked off screen before the show a little bit about your Nissan store in Nashville, Tennessee. So Nashville, I think, is a cool place to have a store. Great environment for business, it seems. But you're having incredible success at that store that is probably even against what others would expect. Tell us a little bit about that Nissan store in Nashville.
Well, I mean, at a high level, I own 4 Nissan Infiniti stores, 3 Nissan, 1 Infiniti. They all make money. They're all solidly profitable. That particular one does very well. But if you get right down to it, I have great operators working for me that came out of our company. But that particular store, I would say the guy who's the operator, my operating partner, is elite. He's an elite operator. So he really knows what he's doing. He's classically trained, technically trained. And it's a great town, but you can be in a great town with a great brand and mess it up. If your guy is better than everybody else's guy, and runs it better, you're going to be fine, no matter what town you're in my opinion.
So when you say winning, what area is that store winning? Is it the bottom line net? Is it fixed ops? Is it variable? You're out punting a lot of Nissan stores.
Yeah, it makes a ton of money. Without, I say none of this in a self-promoting way at all. I think that, I was smart buying it. I wish I'd have bought more. They were much cheaper when I bought that one 8 years ago. But he's a fantastic operator. The team is absolutely fantastic. And that store historically has been either number 1 or number 2 in certain years. Customer pay parts and labor sales, store in the country for Nissan. So it's, in layman's terms, it's the biggest service department in the country
for Nissan.
Yeah.
Yeah. And did you buy it that way or did you grow it?
No.
And
No.
Okay. So where'd you find this operator that you've got in that store?
He's my friend. We were peers.
Okay.
We both came from Group 1.
Okay.
I'll give a shout out to my friend David Beer, who he's we were operators. Yeah, I met him. He was in Lubbock. No, Amarillo. You're tough if you're in Amarillo. Okay. And so I was at a store, I think, that did 42% net to gross for the year where I was at. And so they're handing out the company awards, and then I lose. I'm second place. Number 1 is my friend David Beer, who was in Amarillo. That's how I met him. So we were at an award ceremony for Group 1, probably in 2008 or 9.
You brought
Sam,
him over.
I want to quickly chime in here. So, Matt, your stores in May, you topped, or your CSI specifically topped district, regional, and national fixed ops satisfaction in May. 11 for 11, or like across the board, you performed extremely well. Talk to us a little bit about that. What's the, give us a sneak peek into your I'm not going to ask you what's the secret, because there's no secret, but what's give us a sneak peek into the process, right? What do I experience going to a Bowers, fixed ops or service facility? What is that like?
I think we're continually getting better. And I think that, Yeah, I mean, anybody that owns car dealerships understands that it's difficult, to achieve service CSI above district, region, national, year to date and month to date at every location you own. In metro type stores that I own, it's the people. It's the people, and so we can put people in a great position, give them the tools, give them the measurements, but that is what we expect. That's what we expect. That's not, we hand out attaboy. That was, you read a post that I made really thanking the people, because I can't thank each and every one of them individually daily, even though I'd like to, or I'd like to try to. So I try to acknowledge the people for doing a great job, and it's the people, and so that's really what it is. But we don't hand out, there's not like a secret button, we give everybody a yellow rose and they give us good CSI. No, you answer the phone, you do what you said. And, we try not to create unreasonable expectations. We try not to create an environment where we're scheduling oil changes at a mainline car dealership on a Saturday. It's an unreasonable expectation. When you get your clothes dry cleaned, you don't call them up and make an appointment. You just drop it off, right?
Go
That's
in.
what you do. So,
a
lot of people do things that hurt themselves. We try not to do that.
So Matt, you continue to grow, and I assume you have plans to continue that growth. What are your growth plans? What store are you looking for? What OEM? Is there one in particular you're looking for? Is there a geography you're looking for as you seek to grow?
Well, it's been talked about a little bit, but perfect world for me, find me a big store that is very screwed up and losing a ton of money in a great town. Now that's hard to find, okay? But give me, so that's kind of what we do. I'm a car operator, so I have to feel like I can take something and make it better. I might be wrong.
Any brand, Matt, or is there a brand in particular you'd hunt right now?
I just told you that I think the town is more important than the brand. Now, obviously, in a group like mine, if you have a lot of one brand, or two or whatever, but you're trying to diversify the brands as much as you can. But I don't say no to great opportunities. It's like saying I have too many, kids that make good grades or something, or too many dogs that listen. That's, you want all of them to do that. So I don't really care so much about the brand. I think when you go into a market brand new, that matters. Like, I don't know that I would go into a market with a brand like Acura, let's say, or I'm just pulling that out of thin air. I would rather go in with a mainline like Chevrolet, Ford, Chrysler, Dodge, Jeep, Toyota, Honda, stuff like that.
Yeah. So any tips as you grow, last question up for today, are there any tips that you'd give to other groups that are growing as far as keeping your culture intact, keeping your people trained, keeping everybody focused? I mean, you've got a great operator in Nashville, ton of confidence in him. You probably don't have equal talent at all stores. Like, how do you preserve that culture as you grow and avoid it being diluted as you grow?
You tell them to listen to Car Dealership Guy.
That's right. Everybody knows that. We have a culture where, our culture is about winning. I think every culture is about winning. Find me a great culture. To me, culture is about winning, period. Yeah. Okay. Find me a great culture where they lose all the time and fail. It's very difficult, to do that. So we continually invest into people. I send 2 or 3 people annually to NADA school, dealer academy. I want to say of the 11 car franchises that I have, 9 of them were promoted from inside of my company. So we create a lot of people inside of the company. But I would say this: create a standard. If you have a standard and the standard's winning, you'll have a great culture, because the people will protect that culture for you.
Yeah. Very cool. Well, Matt Bowers, president, owner of Matt Bowers Auto Group. Very cool to have you on. Very cool to hear about your different stores on the Gulf of America, all the way up to Nashville, Nissan, and all the likes. Very cool to have you on the show today.
Our Gulf Coast correspondent.
Thank you so much. Yeah, I'm a regular on this show. So I really enjoyed. I appreciate what y'all do for the industry, and any way I can help the industry, I'm here to do that. Thank you.
You're the man.
Thanks,
man.
man.
Appreciate it.
Thank you. Well, Yossi, fun. It's interesting getting some insights from Cox, from Autotrader, hearing a little bit about the Carfax AutoCheck thing, getting some insights from different dealers. And it's only Friday the 13th, as was pointed out today, which probably explains Anna's tech issues, right? So,
yeah, I mean, yeah, it's definitely Friday the 13th. I woke up with like a sore chest, sore legs. I'm like, oh my God,
no,
I'm only in my 30s. I'm too young for this.
Well,
it was a great show and great insights.
To everybody watching, we appreciate you being here. Thanks for watching this Daily Dealer Live, where we break down the biggest moves in the car business as they happen. And don't forget, we're live every Monday, Wednesday, and Friday. So if this is your world, hit like, subscribe, and turn on those notifications so you never, ever, ever miss a beat. And folks, we'll see you next episode Monday. Thanks, everybody.